Yes. Can you all hear me very well? Good. Okay. Great to be here. Thanks for the commission invite me to join you here to give the talk. For those of you who don't know me, I'm Yangxuan Liu. I go by Serena. I'm associate professor from Ag and Applied Economics Department at UGA. Today I want to update with you about what my thought about the market for the rest of this year, for this year's crop. So let's get started. Before we dive into detail about all the supply and demand, I want to go really quick with you what happened over the past 3 years. As Cam mentioned, this year the planting season is a roller coaster ride. What I described for the past 3 years for the cotton market is also a roller coaster ride. Even until nowadays, we observe more market fluctuation. So what I want to show you over here is on the bottom of the area is the cotton prices, and on the top of this line is the S&P 500 index. Historically, cotton, because it's a discretionary item, the prices for cotton follows the market very well, follow the stock market very well. When the stock market rise, cotton market rise. When the stock market down, cotton market down. Because when the economy is doing well, consumer will purchase more cotton and cotton-related product. Like we buy more clothes when the economy is going well, and we reduce our purchase of clothes when the economy is not doing that well. That is the Euro case before the pandemic. But during the pandemic, because of the lockdown, we observed the cotton market and stock market experience the same time simultaneously drop. What I call is the free fall period in the early 2020. And then because of the global economy, the global central government of multiple major nations around the globe did a lot of stimulus bill or stimulation into the economy. The economy recovered very well. As you can see, stock market recovered very well. At the same time, cotton recovered very well too, with return from 44 cents or 45 cents to go over 90 cents in a very short period of time, around 9 months of period. So that's within a year, over 100% return. That attract a lot of investment money because during that time, stock market really is uncertainty. There's one day stock market rise, another day stock market down. And then during that time, a lot of free money pour out to the stock market, trying to look for the next investment opportunity and find cotton market. 100% return within 9 months, within a year. That's a good investment opportunity. So a lot of speculative money went into the cotton market, and we really see that pushes cotton prices to around $1.45 per pound. So that is a very unique situation. Stock market uncertainty, economy doing relatively well, and then money pour out to the stock market to flow into the cotton market. And also during that time, there's a period of time of global supply chain disruptions. There are some difficulties of shipping cotton from the producing country to the consumption country, to most of the country in Asia, because of the global shipment issues due to the pandemic. And that created a short period of time. There's a shortage of cotton, not because we don't have enough production, but because we cannot move cotton as freely as before from the production region to the consumption region. So the mill in the consumption region, because the economy is doing well, consumer demand is there, the demand for more clothing purchase is there, they have to keep the factory running. But they need to have raw materials, cotton, to keep their factory running. So the mill went desperate in order to fulfill their bills, fulfill their purchases. So they bid every single cotton available in the market. That's also another reason why it pushes cotton to over $1.50. And after that, there's a period of time stock market realized the Fed start to being very aggressive in terms of implementing interest rate hikes, and the economy is not as that promising as before. There is another realization period that both stock market and cotton market fall at the same time. But after that, there's a period around August of 2022. There's a realization. There's another period of uncertainty period. Both stock market rise and cotton market rise because the economy, a lot of the companies on the stock market release their semi-annual report, and it's very well compared to expectations. So stock market rise, the same time cotton market rise. Then after that, what I'm calling right now is market stabilization period. During this period, we observe cotton return back to its normal behavior, that when stock market drop, cotton market drop too. When stock market rise, cotton market rise. It's like a simultaneous movement during this period. So let's take a closer look at after the market realization period, what's happening right now. Since December of last year, after that, what we see is the cotton market and the stock market move together with each other very well. When stock market rise, cotton market rise, stock market down, cotton market down. So we see the simultaneous movement better during this period. So as I mentioned before, cotton market is cotton is a discretionary item. It follows the economy very well. So we need to take a look at what's going on with both the domestic economy in the U.S. and what's going on with the global economy to see, to get a better idea of how the cotton price is going to be for this year's crop. Right now, as I pulled out yesterday, the cash price for cotton on average over the nation is around 82 cents per pound. So let's take a look at it in terms of the economy. So this picture shows you the economic growth on the global economy with emerging market, advanced economy, and the world as an average. So what we see as a prediction by IMF is the global economy recovered very well after pandemic, and right now it returned to the normal trend before the pandemic. So if you remember, before the pandemic, with the normal global average global growth, economic growth, our cotton prices were around 75 to 78. At a good time, there was around 80, lower 80 cents per pound. As we return back to the pre-pandemic level, I'm quite comfortable as the prices maintain at lower 80 or middle 80 cents per pound. So that's the global economy. And then there was some concern during last year because of inflation and what the inflation have on our economy. So Fed steps in very aggressively over the past 1 year and a half to raise the interest rate. And that kind of hurt the cotton export, because when interest rate rise, US dollar appreciating its value, that hurts the cotton export. And this chart shows you over the past year what is the different time when the Fed increased the interest rate and what is the percentage of interest rate increase. Right now it's around 5.25% of interest rate by the Fed target rate. Because of the implemented of different strategy by the Fed market, initially there's a lot of concern of whether the Fed will drag us into the recession, whether it will damage the US economy. But from all these 10 different times, even though it's painful as it is, we are experiencing high interest rate, we are experiencing higher cost of borrowing, but the economy is quite resilient for the US economy. So this picture shows you in terms of the economic growth for the US economy for the past several years from 2019 until last quarter of this year. We see there was a short period of negative economic growth in the early 2020 during the time of hyperinflation, and Fed is being very aggressive, increasing 75 points per time in terms of interest rate, and there's a lot of uncertainty during that time. And we thus experiencing a short period or two quarters in terms of negative economic growth, but after that, economy recovered very well with positive economic growth. So the economy in the US is doing very well overall. And what we also see in terms of data shows about the consumer confidence index. This index showing how confident the consumer about the economy is really linked to the purchase behavior of consumers. So when consumer is more confident about the economy, they will increase their purchase, including cotton as well. So what we see is in the period of pandemic, consumer confidence dropped sharply, and after that, because of stimulation by the U.S. central government or the stimulus bill implemented, consumer confidence rise, and then during the high inflation period, consumer confidence drops, and it also reduces its purchase behavior. But now consumer confidence rise to the highest level over the past 2 years. So that really shows we are doing really good, better than expected in terms of the economy and consumer confidence. And that gave me a little bit more confidence in terms of the cotton market and the prices for cotton market. And this graph is really shows you in terms of the inflation rate in the U.S. What we see is since the late 2022, the late middle of the year or late 2021, we really see there's a rise in inflation rate at a high point over 9% of inflation rate in the U.S. Last month's data shows really better confidence about the interest rate. Fed was able to reduce the inflation rate to 3% overall for the economy, even though it's still a little bit higher than the 2% target rate by the Fed in terms of inflation rate, but it's really dropped down significantly. So that gave more confidence for the U.S. economy as well. So the hardest time of hyperinflation is almost over. But Fed still want to keep the interest rate at a relatively high level for a certain period of time to make sure the inflation is really under control. I do expect the interest rate might be starting going down by the end of this year or the last quarter of this year. So hang in there if you are experiencing very high borrowing costs in terms of your loan. We are going to be experiencing a period of time that interest rate will start dropping, but I don't expect the interest rate will drop very quickly to the pre-pandemic area. It might take a couple of years for the interest rate to start gradually drop and Fed start gradually reducing the interest rate. So let's take a look at in terms of the cotton supply and demand after we review what's going on with the economy. That gave us a lot more confidence in terms of the cotton market. So this graph shows you the leading global cotton producers. Most of the country, except for the United States, for the production this year compared to last year, U.S. increased production, but all the other countries reduced production, mostly because of other crop is more favorable in terms of prices, and that pulls out some acreage from the other area. And in China, Xinjiang province, which is the major cotton producing area in China, experiencing some weather situations, so their production is a little bit lower for this year. The same for India, because of weather conditions, the water issues, India didn't produce as much as last year as well. Brazil reduced certain crop, reduced the production of certain crops also because of comparable advantage in terms of other crops pull the cotton acres down. So this year, it is estimated that cotton production is around 116.8 million bales globally. And then the next graph shows you in terms of the usage for all the cotton globally. China still maintains the #1 country in terms of milling all the cottons, and then followed by India, Pakistan, Bangladesh, Turkey, and the rest of the world. What do we see compared this year with last year is consumption increase. So for all these countries, China, India, Pakistan, Bangladesh, Turkey, compared to last year, all increased. So that gives us a little bit more confidence in terms of cotton prices here. However, because of over the past several years, cotton demand really is not that high. So we start to build up some global demand or global storage in terms of cotton. So this graph shows you the cotton ending stocks and also cotton A index, which is the cotton prices traded globally. The ending stocks for this year increased a little bit than last year, and what we see for this year's estimation by USDA is the cotton outlook A index dropped from last year. So we are not going to have as favorable prices as last year, but I'm pretty confident with the current prices around 80, lower 80 and middle 80 cents per pound. And then let's take a look at US in terms of the production. This year, because of a lot of acres pulled into other crops, we do planted a little bit less cotton acres for all the major cotton production regions. So right now we have all the regions with reducing in terms of the cotton acreage. We are on the current USDA estimate estimated around 16.5 billion bales in terms of production, and we planted over the nation a lot less than a few years ago. We planted 11.1 million acres of cotton for this year. So a little bit lower production, little bit lower acreage for cotton here. But even though because of that, we are still unsure about the harvest acre because of some weather situations we will touch a little bit later as well. So here shows you in terms of the USDA cotton stock to use ratio and also the prices. What we say is the cotton prices for this year, USDA focused around 76 cents per pound. But based on my observation of the market, I'm a little bit more confident or optimistic than USDA projections. So what I want to update you over here is there's still uncertainty in the cotton market. It really depends on the weather situation and how much we're going to harvest from now until end of October or November. This graph shows you in terms of US drought monitor. Over here, we didn't experience as much of a drought in Georgia, but in Texas, there are some drought situation in Texas. So there's some uncertainty in terms of the harvest acre in Texas. If severe drought and will result in some high abandonment acres, we might see the cotton prices could push up even higher. It really depends on what happens in Texas and the weather situation there. As Kemp mentioned earlier this year, for Georgia, the crop delayed maturity. This is not only happened to Georgia, but happened to other cotton growing regions as well. This chart is the cotton progress condition as I pulled from last week's recent data. What we see in terms of both planting for this year as a hard line compared to last year and then the 4-year average for the past 4 years. For both planting, squaring, setting bulbs, we are still on delay in terms of maturity for cotton plants over the nation. And then for the good and excellent condition for cotton for this year, we started really well in terms of the condition for both good and excellent for cotton, but over time it started to drop a little bit, and we are a little bit better than last year, but it's still not as good as 2020 or 2021. So really quick about the Georgia crop progress and condition report as I pulled from the recent report. For squaring in Georgia, for this week it's around 88, which is lower than the 5-year average, and for setting bulbs is 45%, which is also lower than 5-year average. And the condition for cotton is we have fairly good at around 60% and excellent around 11% for Georgia's crop. And here is what my thought. As I mentioned earlier, I'm quite comfortable with the range of 80 cents to middle 80 cents per pound. And this is the data I pulled from last night from barchart.com, shows you the cash price and different futures price in terms of traded price around 85 cents per pound. Yesterday, we do see a very sharp increase in cotton prices from yesterday around 4 to 5 cents per pound. That is mostly contribute to favorable, better than expected stock market companies mid-year report that pushes stock market higher, also draw cotton market higher. I do consider these prices as a very favorable prices for now. Maybe considering some selling strategy, booking portion of your cotton for capture these good market opportunities. So very quick about ag policy, as I know Dr. Fisher will mention a little bit more later on. So for stacks for this year, there are some opportunities that producers can get stacks payment for their 2022 crop. Yearly stack will pay out after August 1st. So if you purchase stacks or your producer purchase stacks, do mention to them or check with your stacks indemnity to make sure that you receive the payment. And for Arkham PLC, for the last year, for the 2022 marketing year average, is estimated around 45 cents per pound, which is way above the reference price. So we are very unlikely to receive any payment from there. For sure, we're not going to receive anything for PLC. And if your county don't have any yield damage, you're probably not going to receive anything from ARC as well. Really quick about Farm Bill. The Farm Bill will expire by the end of September for the Title I, Title IV, and Title 11. Those are mandatory, so the money will maintain until the end of this year. And for the other titles, we are not sure. And the main expectations for the Title I, which is the crop-related title, there are some discussion about increasing reference price for the cover commodity, and there are some discussion about updating base acres with both of the program trying to cause no harm for the crop insurance program. So that is a really quick update on the cotton market and cotton policies. Here is my contact information. I do really want to give my appreciation for the Cotton Commission and also Cotton Incorporated and the cotton community for support my work, and also to give me the opportunity to come over here and talk. Any questions?
All right, thank you, Serena. We're going to do one more